discuss is Peter Switzer, the founder of the Switzer Report. Pete, good morning to you. First of all, I just want to get your thoughts on this looming trade deal. We've kind of seen this movie before, a few times now actually, but what do you make of it?
Well, it's really important to remember that December 15 is the date, that's Sunday, when tariffs are supposed to be increased on Chinese goods if there's no trade deal struck. Now, overnight, Donald Trump is actually really tweeting strongly that they're very close to a trade deal, and Wall Street has liked what they've read and heard. And I think the important thing is that, and in fact, I actually wrote for Switzer Daily this morning that I wrote last night that basically an 11-hour rescue solution to this trade crisis was going to be a possibility. And it's classic for a guy who looks like a Hollywood president to come up with something like this right at the last minute. And I think that's what will happen. I think we will see something that really will excite the market next week. A lot of this has already been baked into the stock market, but the opposite, if that happened, I think the market would sell off pretty strongly. So I think the best case scenario seems to be emerging, and we'll probably see sometime over the weekend that a deal actually has been struck.
But isn't this how it goes, Peter? I mean, there is talk of the trade deal taking place and the markets react positively, and then there's a hiccup and the trade deal is off, and then the markets suffer the consequences. Isn't that
that's exactly
the
right.
kind of the routine?
It is, but behind it really is a whole bunch of what you'd call CFOs, chief financial officers and CEOs who are holding back investment in their business because they think, well, what's going to be the future tariff situation in a month's time or 6 months' time? If they get the best case scenario, a lot of companies will start to invest early in 2020, which will be good for the US economy, which ultimately will be good for the president's election stocks as well. So you're right, but that's why the market spins either way, because important investment hangs on these tariff discussions.
No guessing, Pete, which result in the UK election. The polls finish in around about 90 minutes, or they close in about 90 minutes from now. Obviously, a win for Boris Johnson would be better for the markets. Is that your opinion?
Yeah, exactly right. And when you look at it, Jeremy Corbyn, the Labor leader, has some really sort of scary policies for a stock market because he wants to nationalise both the energy sector and the transport sector. And these are big calls, and they're very old-fashioned, government getting involved in regulating the economy. Now, this could appeal to a lot of people nowadays because capitalism is not delivering great wage rises, and Britain in particular, because of the Brexit thing, has been really struggling for some time. But certainly the market would prefer a Boris Johnson solution, and the EU would as well. I've said it this way. I think the EU would prefer to divorce a Boris Johnson UK rather than a Jeremy Corbyn UK.
Does it surprise you at all, Pete, that businesses are already planning to move out of the UK and go into Europe in the event of Jeremy Corbyn winning?
I wouldn't be surprised at all. Yeah. And it's purely just a bottom line economic decision, and they should be doing that if they're true to their shareholders, because the shareholders are the owners. If a Corbyn UK is going to be bad for their bottom line, they basically have to make that rational decision.
All right, good economic news locally this week. Have we had any, Pete?
Not too much, Pete. I'm a bit worried about, consumer confidence was down to 95.1, that's the Westpac one, and anything under 100 means that the pessimists are outnumbering the optimists. Business confidence fell from +2 to 0.1, so we're just in positive territory there, but the long-term average for business confidence is 5.8. Business conditions went up a little bit, which is from 4 to 4.2. That's okay. The one good piece of news I think I would throw in is house prices continue to rise. In the last reading was the biggest increase in 2.5 years. So at least some positivity is creeping to the economy. And one really weird fact you'd be interested in, Pete, the luxury car index is up for the 5th month in a row, but the luxury car index is linked closely to house prices. So when house prices rise, up it goes. When house prices fall, down it goes. So we feel wealthier when our house prices go up, and therefore we buy luxury cars.
Okay. So that goes to show that there are, in some sections, plenty of money to go around, as usual.
Yeah.
Hey, Peter, I just want to get your thoughts on Westpac, the AGM yesterday. What was your view of everything that took place and what might be the repercussions from that?
Yeah, look, I think the Westpac board really got off more lightly than I expected. I think the bottom line for Westpac is it's going to take some time for it to rebuild its brand, and it therefore needs a new CEO ASAP and a new chairman. These guys got through a pretty bad day, as I say, better than most of us expected. But the best thing for the bank would be to get new leadership in place, get on top of their Austrac mistakes and go forward. You know, our big four banks are easy to dislike, but they're really important to the economy, which was shown during the GFC. So I just think they have to get their house in order and play ball according to what regulators want. If they don't, we're going to keep seeing these problems. Shareholders will lose value, and some people will actually, switch banks and maybe switch to lesser conveyances.
Yep. All right. Peter Switzer, founder of the Switzer Report. Always good to get your thoughts. Thanks for joining us. We'll talk to you again next week.